This is the dollar Swissy. I mainly trade the Euro USD, but I do use this pair for correlation. And as you can see, for the last few weeks, whilst price was going clearly up in a channel on the Euro, it has been clearly moving down. And I've placed the upper trend lines as many touches as I could find. Where did price stop today? Well, within a fraction of this upper trend line. The lower trend line is a little bit messy, but again, I've gone for the most touches I can find. And this was that major line in the sand, 90, 20 and 90 just below. We are in a clear down channel, and once again, were you able to catch these moves when price comes back up to the trend line? Really, you can look simply at the trend line in a lot of these trades, but we then look for added confirmation as before with the horizontal support. Here was around 9200. We didn't get a pullback and therefore we didn't get an entry there. The next point that price was seen to be struggling, support, resistance, etc., was this area here, 9150. Where we did get a good entry is here at 9135, touched it to the pip and again fell away. We are now nearing this 90 area. 9020 we know from previous videos has been major support, and therefore we were not looking to short in this area. The nearer price gets to this area, the less likely we are to take a trade, because the potential reward for this trade is much less. If price continues to fall, we will look for a break and a close below 90, then a pullback to the top of the channel with a view to further falls. If price is to break out and move back up, we then look for a breakout trade, which I will cover later on. This is the dollar yen. I don't trade it that often. It's one of my reserve pairs, but we were looking in Forex Mentor Pro the other day for a pullback to 8200. And once again, the reason is it's a whole number, psychological number. It is previous support and resistance. If we scroll over to the left, you can see how here it was major resistance. Price failed to break. Around this area, we have had many instances going back into 2011 when this has been an important area. Therefore, since the turn of the year, price has gone up clearly in a straight line. Where was the intersection of support and resistance? On multiple reasons, here at 8200. A further thing to note here, had you been able to catch this move down here when price was around 7600, notice how price never broke the trend line, and therefore a long-term trader who is trading with the trend would be looking for an entry around 7700 and would still be in that trade. 700 pips at the peak and at the current 600 and odd pips. And a long-term trader would only be looking to exit this trade once price breaks the trend line. And what they would also do is, as price has moved up, they would have moved their stop from initially down here, and then as price moves up and makes the first pullback, they would have gone to here. The next pullback, they would have gone to here, as in here, and the next pullback, they would have gone to here, and the next pullback to here. So possibly they took themselves out here, but that is a huge gain from a potential move with a 50 pip stop for a potential 750 pip gain. That is the aim, that is what we want to be looking for. If you want to trade intraday as well, then that's fine. We can be looking for trades all the way along this move, but if we can catch the big moves at the beginning as well, it's almost money in the bank. So far this has all been nice and simple. We've had straightforward channels up and down. It's not always as clear as this. And one area of confusion that people get is, for example, if you were trading this on the 4-hour chart at the moment, you may be of a mind that this is in a downtrend. This is the 4-hour chart, and if we ignore those upward lines, then we would be looking here at a potential move down. We're in a down channel. Therefore, what do? On the long term, it's going up, and on the short term, it's going down. Well, once again, 8200 therefore was multiple reasons to take this trade in this area because of the fact it was the bottom of this trend line, that intersection, and this trend line, because again, what has price been doing? It's been coming down, going up, coming down, going up. Now, this is the all-important area. If price was to break here, then we start to think in terms of potential moves back down to here. At the moment, we continue to go up. And I tend to find that if you are trading 4 hour, for example, and you're not sure of the trend, go to the next time frame up. It gets more difficult when you're trying to trade, say, a 15-minute chart, and you can have a 4 hour going down and a daily going up. But we'll cross that bridge as we come to it. So far, I have shown you what is probably the most simple strategy on the planet. We have simply been looking for support and resistance, both horizontal and diagonal, and basically we are looking for where price has reacted in the past, and therefore probability says it will do so again. We've also looked at candlesticks and the shapes, and I've shown you how important that they are. And the final thing is correlation, the way in which different pairs move in relation to others. And you have to be careful with correlation, because the Euro USD is going up 90% of the time that the dollar Swissy is going down. Were you to take both of those trades, you have actually doubled your risk. If you are limiting yourself, as you should do, to a maximum risk of, let's say, 5% on a smaller account and 3% on a larger account, you would only take one of the trades, or you would split the trade in half, i.e. you would take 1.5% on the euro and 1.5% on the Swissy. There's no real point though, because then you're paying two lots of spreads. I prefer the Euro USD. It normally has a bigger daily range, and to me I find it more predictable, and it is the more traded pair of the two. And the final thing to consider is Swiss National Bank occasionally will intervene in the price of their currency, which means they will suddenly dive in and the thing will shoot off, and you cannot predict when they are going to do it. In the next few videos, I'm going to show you lots more potential indicators, and the way that you should treat this is almost like a supermarket. Choose the indicators that you think will suit and will help you, and add them to this particular strategy. If you find that the strategy is not suitable for you, then drop it. If you can simply trade from support and resistance, and you have the patience and discipline to do so, you can make a profit simply from doing this. But that's the idea. The way that we go forward, we will build on this, we will add different indicators as we go along, and then you make your own decision as to the strategy that you think suits your personality, your risk factor, your stress levels, etc.